Thanks for joining us at XM.com. This is today's Daily Market Comment by Raf Boyajian. I'm Cristina Marujos. China's economy grew by a less than expected 6.3% year-on-year in the second quarter of 2023, raising concerns not only about a deepening slowdown, but also about the lack of robust policy response by authorities. On the whole, the data wasn't terribly bad, but the fact that the economy was in a far weaker position in the year to June than previously anticipated, and in the absence of substantial stimulus measures, there's a growing sense of frustration as well as anxiety about China's dwindling economic prospects. Stocks in Asia slipped on Monday on the back of the underwhelming data. European equities opened in the red but began to recoup their losses as U.S. futures turned positive, suggesting there is still some momentum from last week's recent rally that pushed the S&P 500 to 15-month highs. Hopes were lifted last week that the Fed was headed for a one-and-done rate hike in July after U.S. CPI decelerated more than expected in June, sparking a fierce rally on Wall Street, particularly for the Nasdaq. However, Fed Governor Christopher Waller dented sentiment somewhat on Friday when he hinted that he could still support 2 further rate increases this year, putting the brakes on the rally. An upbeat consumer sentiment survey from the University of Michigan also added to the caution, serving as a reminder that the upside risks to inflation haven't completely dissipated. On Tuesday, the latest retail sales figures will be watched, along with earnings by tech heavyweights Tesla and Netflix. But as stock market bulls paused for breath, there was some relief for the U.S. dollar, which plummeted to 15-month lows against a basket of currencies last week before the sell-off eased on Friday. The greenback is facing some downside pressure again on Monday, and with a few Fed speakers on the agenda this week, it might struggle to find much support, as there are also risks from the raft of CPI reports due from a number of countries, including Canada, Japan, New Zealand, and the United Kingdom. In commodities, gold is resisting any sell-off attempts, trying to hold on to the $1,955 an ounce level, in the hope of being able to have another go at overcoming the resistance in the familiar $1,960 an ounce territory, which once again blocked advances last week. This was a Daily Market Comment here at XM.com. Have a great week.